Hi guys, welcome to Money Control. I'm Karunya Rao. With me is Manisha Gupta. Firstly, thank you for waiting by. We're here to discuss about what's happening in the fuel prices, and we've already seen a 80 paise hike today in both petrol and diesel after a gap of 4 months. What is it that lies ahead, given the rally that we've seen, a revival in the uptick in crude? What lies ahead?
I think, Karunya, we should prepare for ourselves for higher petrol and diesel prices from here on. As you mentioned, this is the first time in 4 months that we have seen a hike in petrol and diesel prices. This is the longest gap that has gone without a hike since petrol and diesel prices were partially decontrolled in June 2017. So clearly we were waiting for a hike, but less than a percentage point of hike is what we have seen. In the meanwhile, the crude oil prices have gained up by 25%. So, well, yes, you could be expecting more hikes from here, given the fact that the OMCs are incurring a loss of 10 to 12 rupees per litre. At least half of that is what you will see being passed on to the customers.
But how bad a hike are we expecting? Because when in November prices were already starting to rise, the government has actually cut the cess on fuel prices and they absorbed that hit. And now, of course, we're all seeing Brent, scaling up to crazy highs. So, what lies ahead in terms of the quantum of hike? What should the consumers brace themselves for? Because right now it's very negligible. People might be able to absorb it very easily. But can we see like a high single or perhaps a double-digit hike as well?
Double digit, maybe not. Our government will be very mindful of passing it on to the customers. I think there's one thing that works in positive for the government is that we are able to import from Russia at heavily discounted prices. But the other thing is the Indian rupee, which has continued to depreciate as well. So we are importing at 76, 77 rupees to a dollar, and that might pinch us yet again. What we are looking at is higher prices, yes, because when you look at Europe, the petrol, gasoline prices are at record highs. Even the US gasoline prices are at a 17-year highs. This is the record highs because US started keeping record of these prices only 17 years ago. So for the Indian markets as well, even as we've started slower here, ensuring that it doesn't impact the customers, but I'm assuming that you could be looking at higher hikes from here on. Even as we're talking about 10 to 12 rupees of a hike is what the markets were anticipating. But I think every single day you are going to be looking at some hike there. There could be inflation concerns for sure coming back for retail consumers like us. But remember, when you talk about transportation and travel, crude oil is your base for everything. So
have cycle sales shot up already?
Let's not get there because the metal prices also are high. So there's no respite.
So there's no respite but to just walk it up. But tell me one thing. You said we're getting oil at a discounted price from Russia, but at the same time the rupee has depreciated. So will the discount in the prices be able to offset rupee depreciation impact and of course the global trend in crude oil that we're witnessing?
Not so much, because remember 4 months ago crude prices were trading at $70 to $80 a barrel. Even with the correction that we saw from the highs, which was at $139, we are holding around $120. And the problem is not out of the way, because this week European Union is talking about a 5th round of sanctions, and even if they don't come out with sanctions on oil, just the fact that they're talking about is significant enough to keep the crude prices higher. So whether it has been about Vital, JP Morgan, Morgan Stanley, they're all telling you that there are concerns going forward from here as well. There are too many sanctions, too many supply disruptions, and Karunya, war is one part of it. Look at what's happening with Houthi rebels in Saudi Arabia. They have been impacting those oil facilities as well. And Saudi Arabia has said that if there is supply disruption in global oil, they can't be held responsible because it is the Iran Houthis doing. So I think the kind of statements that we're looking into the markets, $100 is here to stay. And have we adjusted our fuel prices to that?
Not yet. So a lot more price hikes coming your way. What about inflation? How big a concern is that? Because Powell last evening once again flagged off that inflation is a very big worry. They would expedite the rate hikes cycle as well. So will this be a short-term phenomena that we're seeing in oil prices? Like you said, April we could see worse. We could see it getting worse. But over the longer haul, over this next 1 year, how are analysts predicting crude to behave and other, metal and commodity inflation? What is the trend that they're predicting?
So I think we're looking at higher highs, and not just for this year, but the next year as well. When you look at all of these big oil traders and companies, they are factoring in prices around $90 to $100 a barrel. So we're not going too much lower from here on. And when we talk about inflation, let's not forget, because we are looking at higher metal prices, we're looking at higher food prices, higher raw material, higher fertilizer. There's nothing around you which talks about lower prices here. So yes, are we ready for higher inflation? We sure are. There are even concerns about stagflation, recession, and interest rate hike. Yes, it was a very hawkish
Yeah.
statement from Powell yesterday, and they might have to do it because of higher inflation. But with the kind of numbers that we're looking at in sense of companies' earnings or employment, all of that doesn't sound so good right now. So is the Fed behind the curve? It sure is. That is something we've been talking about for some time.
And to catch up, they could really do it aggressively. So we know that we want to stay away perhaps from OMC stocks for now. Maybe, stocks like ceramics and sanitary ware as well, which are a big consumer of gas. What else are the pockets which look slightly tricky right now from a commodity usage standpoint?
I would turn it around and I would say ethanol and sugar story is just so great because we are looking at ethanol, 9.5% of ethanol blend is something that we already have achieved. So the government targets of 10, 12, 15, 20% is pretty there because every day in the parliament we hear some announcement by some minister talking about the importance of green, clean energy and ethanol. So, and we've seen how sugar stocks have done in the last many days. The other thing that you should perhaps keep away from the markets right now is going to be some of these raw material prices, consumers especially. These are the stocks which haven't done well. But sugar, metal producers,
even paper
mining,
seems to be in a sweet spot.
It is.
What about cotton? Will now textile manufacturers and perhaps some of them who are also retailers, could they also see a beating?
They could be looking at that because the cotton prices also have run up so much, 11-year highs in the international markets, and the buying seems to be quite strong. And India, which was in a sweet spot at some point because we were at a discount, we are now at a very high premium to the international markets. So yes, I think your point is very valid because we might be looking at demand destruction for some of these sectors, especially going forward. So many of these raw materials is something that a lot of people will not buy. People will cut down on these. So whether it is about sugar, whether it's about cotton, whether it's about rubber, a lot of these commodity-centric demand destruction is something that we are looking at.
So I think for now, what looks like a safer bet is perhaps something that's related to the services space and not too much of manufacturing and stuff. But thank you so much for joining in. I hope our viewers have got a lot more clarity on what to expect in terms of fuel price hike, commodity price hikes as well going forward. And we will also be getting you a video where we do a detailed math about how how fuel prices actually shape up and what exactly are you paying for. Stay tuned for that. But for now, it's a goodbye from me and Manisha. Thank you for tuning in.